Welcome everyone to the Real Adam Broker Podcast series, where you will learn about the brokers on the Real Adam platform and their organizations that they represent. My name is Luis Delgado, account executive at Real Adam. Real Adam is the #1 lending as a service technology platform, empowering commercial real estate brokers and lenders like banks, credit unions, non-banking organizations to generate more commercial loans. Today, I have the pleasure of introducing Joseph Choi, Director at Berkadia. Welcome and thank you for taking the time to present to us here. And before we kind of dive into Berkadia and how you got there, I want to take it back to where it all started. How did you get into commercial real estate, into the space, and how you ended up at Berkadia?
Yeah, hi Luis. Thanks for having me, and thanks for having me on this on the podcast to discuss what Berkadia does and about my own history. So where it all started, I had the fortune of meeting the right mentors in life. Growing up, I think a lot of us are asked, what do we want to do? And we try to find the right opportunities to, go chase our dreams. And fortunately, as a freshman in college, I spent the summer between my freshman and sophomore years working for a mentor of mine who's in the residential mortgage banking space. So he does residential Fannie and Freddie loans for homes, 1 to 4 units.
Right.
And when working in that space, I kind of fell in love with the balance between technical expertise, numbers knowledge, and just being adept with numbers in finance, and also the sale aspect, providing borrowers with the service and the product that they need and doing it in the right way. I got a real joy in seeing deals done the right way, and like the celebrations that happen at the end of deals. And that's what started my whole venture into real estate. My first job out of college, graduating from USC undergrad, was as an investment sales broker in the San Fernando Valley for a boutique shop. After about a year and a half of grinding away there and making my 100 calls a day, and just how to be a better salesperson, I decided to switch over into the mortgage banking side. Once again, relying a bit more on the technicals and the numbers. Investment sales, not to put a knock on it, but it is more pure sales than mortgage banking.
Right.
And I figured my strengths were a bit better, stronger with the numbers. And so my manager now is the mentor that I met back in 2016, and he took me on, hired me in Los Angeles, and about 9 months later said, hey, there's a team up in San Francisco, one of the top 10 positions at our company. Why don't you go with him and learn how to do the business, learn the product. And then here I am 7 years later.
Wow, that's it. That's definitely a journey. And you mentioned, the mortgage banking having a combination of being good at numbers and sales. I think you guys are like, the ultimate salesman. Like, like you have to be good at both. Like, honestly, like it's already hard to do sales, and I can imagine just doing the numbers as well. Well, look, tell me about Berkadia. What you do. I imagine every office is different. Like what do you guys specialize in? What kind of people do you like to work with? Lenders, etc.
Yeah, so Berkadia is a nationwide commercial real estate company. We have 3 main lines of service. One is investment sales or sales brokerage. 2 is mortgage banking, which is the division that I'm a part of and what I do. And the third aspect is loan servicing. We're a privately held joint venture between Berkshire Hathaway and Jefferies, the investment bank. We have an annual transaction volume of around 70 billion. And we have about $350 billion worth of loans under management in servicing. Because we're a private company and we have such high profile ownership, we take pride in doing things the right way. Warren Buffett is infamous for finding long-term intrinsic value in his investments. So I think the fact that he did us over 10 years ago goes a long way in showing our future outlook and our own longevity. As a private company, we take the long view in advising our clients. I think a lot of our competitors are focused on finding the next deal, and either whether it be a refinance or a sale. We take the opposite approach. We want to advise the client throughout the entire life cycle of their investment, from acquisition to refinances or recapitalizations of the ownership structure, to changes in business plans. And because we are the largest non-bank servicer in the nation with $358 billion of loan servicing, we stick through the entire loans life cycle with our client. If there's anything that comes up or any transfers that need to happen during the life of the loan, we have our own servicing department. So our client always has one point of contact for all of their needs. Our market share in our industry has drastically increased since 2019.
Yeah.
And I know a lot of our competitors, a lot of companies like to say that they take the long view and that they are relationship focused. But I think the fact that our market share has increased from pre-pandemic into, we're the number one Fannie and Freddie HUD agency lender as of 2021. And I think that growth during this time of difficulty has shown that our clients see that we really are focused on them, that we're not looking for the next deal. Coming out of the pandemic, we've done more loans, we've done much higher volume in transactions.
That sounds awesome. It sounds like you guys actually walk the walk, not just talk about really caring about your clients and the client's needs. I like that.
Every year we have our meeting with our investors, basically with Warren Buffett, and he always emphasizes to us, one, don't lose money, but two, more importantly, don't make me look bad. So we never want anything coming up on the news, and so we just make sure everything that we do is done the right way.
Right. I mean, yeah, I would definitely feel a little pressure if I heard him say that. No pressure at all, though, huh? Yeah. Well, I see the transactions. How many? I guess. I'm curious, how many offices are there in total? I mean, I imagine they're in every state. Are there any deals that your office likes to, focus on specifically, or ones that you could talk to me about, and I guess, how you guys go about, structuring a deal and going through it, kind of how you guys are different?
Yeah. So we have, let me take a step back and just give you
absolutely.
some of the numbers about our company. So last year we did about 40 billion in loan originations, and there's 21 billion here, but we did 27 billion in investment sales, and we did over 2,100 specific transactions. For the agency space, we were the number one Freddie Mac lender, the number three Fannie Mae lender, and the number three HUD lender. And in 2021, we became the number one overall agency lender. So if you combine our volume for Fannie, Freddie, and HUD, we ended up number one in our league tables.
Wow.
We also did $8 billion in debt fund loan transactions last year, and $5 billion with life companies, and $6 billion with CMBS and regional banks. We have 65 offices in mostly all 50 states. I don't think we have offices in Hawaii and Alaska yet.
Not yet.
We do have an office in Bozeman, Montana.
Okay. Montana, who would have thought? Yeah.
And so we're nationwide. We're, unlike some life company lenders or regional banks, we're market agnostic. The programs that we offer are available in all 50 states. They're available in secondary locations, markets, and even rural markets. And so we could have a borrower based in California who wants to invest in Texas or Florida, and it's all the same platform. They can come through us in the San Francisco office here, and we would work with one of our Florida correspondents or the Texas correspondent in order to have local market expertise.
Sounds very convenient.
Yeah, the majority of our activity is with multifamily. As you can see on the right-hand screen, we did 88% of our assets that we transacted on were multifamily. However, we do have specialty groups such as hotels and hospitality, which was a bit difficult in 2020, but in 2021 and so far this year in 22 have come back extremely strong. The destination hotels, like driving destinations,
Mhm.
places like along the Central California coast,
Mm,
or like a 3 or 4 hour drive from LA or San Francisco,
yeah.
have been in vogue these days. And so we were seeing a lot of activity with these smaller boutique,
Mhm.
unflagged hotels. We
Mhm.
also have student housing, seniors housing and healthcare, office and retail and industrial.
Mhm.
You know, on this graph, it only says like 1% or 2% for industrial and retail, but I think it's important to remember when you're doing about 40 billion in
Right.
mortgage banking, and 1% of that is still 400 million or so.
Right. That's still pretty good. Yeah. Um, tell me about the actual deals. I'm curious to see those, like some I guess recently ones that you've guys closed.
Sure. So the majority of our, if I focus on the mortgage banking space, the majority of our business is with Fannie and Freddie HUD through
Mhm.
agency financing, which are either long-term fixed rate loans, or they can
Mhm.
be floaters,
Mhm.
typically 10 years, perhaps 7 or 12.
Mhm.
Um, However, in the last 2 years or so, with the markets moving and you know, people chasing deals a lot more aggressively, we've
Yeah.
expanded our transactions to include, I believe last year we transacted with about 80 different debt funds
Okay.
for bridge loans. And
Mhm.
so if you're either buying a property that needs to be renovated or is going through
Mhm.
some transitional phase and is not completely stabilized with market rate rents and typical operating expenses,
Mhm.
in those situations, we found it beneficial to find a bridge lender who will fund at a higher leverage on the purchase and also
Mhm.
100% your anticipated capital expenditures.
Mhm.
And so I wanted to highlight a couple of those deals for you.
Okay. Let's do it.
Yeah, so this first one called Hermosa Village. This
Mhm.
was for a California-based family office,
Mhm.
and they acquired 238 units that were built in 2020.
Mhm.
Um, This was purchased in January 2021 for
Right.
49 million.
Mhm.
And the thing that was special about this was that while it was under contract between the buyer and seller, the property was just going through its initial lease up. And so at the time it went under contract, it was just 30% occupied.
Mhm.
And so obviously that wouldn't make sense for a stabilized loan like Fannie Freddie or a life
Yeah.
company.
Mhm.
And so we partnered up with a debt fund called LaSalle, and
Mhm.
it provided a $34 million bridge loan over 3 years, interest only, with 2 1-year extensions.
Mhm.
The reason I like to highlight this is because although there are over 150 different debt funds out there offering similar products,
Yeah.
it, it's important for us to match the loan and the lender with the borrower's business plan. And in this case, the borrower did not plan on having this initial loan for longer than 9 months because they knew within 9 months this property would be fully leased up. They did
Mhm.
to get a 7 or 10 year fixed rate loan.
Yeah.
And so up front, for this assignment, we had to go out and pre-negotiate some of these loan terms with the debt funds. Typically, debt funds like to see anywhere from 12 to 18 months of yield maintenance, so that
Mhm.
if the borrower decides to pay off the loan before those 18 months, then
Mhm.
the lender would be owed the difference between the interest paid at payoff, total interest paid at payoff versus total interest owed over 18 months.
Yeah.
In this case, we were able to negotiate that on the application and have the prepayment yield maintenance period reduced from 18 months down to 9 months.
Mhm.
And so
Mhm.
the borrower acquired the property in January, leased it up over 6 months, let it season for a couple months in July and August, and
Mhm.
we refinanced it with Freddie, who gave the borrower about a $6 million cash out in September, just 8 months
Nice.
after they initially purchased the property.
Nice. Nice.
Yeah, and yeah, so like one thing to highlight is just the importance of having the product line up with your business plan and finding
Yeah.
the right lending partner there. And
Mhm.
secondly, I think um, oftentimes borrowers assume that a bridge loan is how or has to be a value add loan. Like they
Mm-hmm.
have to put in at least $5,000 or $6,000 per unit in renovations in order to
Mm-hmm.
qualify for a bridge loan. But that's not necessarily the case.
Mm-hmm.
As in this case, if you have something that just needs some time to season and
Mm-hmm.
lease up, then we can do a short term, less than 1 year hold like this, just to bridge you over like the bridge loan should do.
Right. Right. Sounds like you guys did a phenomenal job on this one.
Oh, we like to think so. This second deal
Mm-hmm.
of the Scape Arrowhead, it was in Glendale, Arizona, built in 2021, and it went under contract while the property was still under construction. So the seller was the builder; it was a merchant builder.
Mm-hmm.
They wanted to get out, sell the property because they thought the market might have a downturn in 2021. That's understandable. In 2020, there was a lot of uncertainty, and throughout 2021 also with different narratives about rising interest rates, whether or not the market is frothy, do we have enough out there? Oftentimes the lender will not lend on unfinished collateral like this, because from their mindset, in the worst case scenario, if the loan goes bad and they have to take over the property, they want a fully operating asset that they can sell at the market, recoup on their losses on the loan. But if the property is either unfinished or not operating to code and therefore unable to operate the way that it was intended to be, then the lender would just be left with an unfinished asset. So we were able to structure around this by having the seller provide a personal guarantee to the buyer for completing the rest of the construction work.
Yeah.
And we had the buyer assign that completion guarantee over to the lender. So through the transitive theory, in effect, the seller is guaranteeing to the lender that the property will be finished construction even after closing. And so lender took that assignment of guarantee. They also reserved for the remainder of the construction costs in order to complete that work. And once the deal was closed, in monthly increments, whenever a draw was requested, the lender would refund the seller for additional work as it's completed.
Right.
So the things I wanted to highlight on that were, once again, just having a mortgage banker and a product who understands your business plan.
Yeah.
I think most mortgage bankers would have turned us down because of the difficulty of finding a lender who would be open to lending on an unfinished product and also be open to structuring around it to sort of mitigate some of their credit risk. And so that really came down to knowing the right couple of lenders who would take a look at this out of the 150 or so debt funds. Secondly, just the importance of having the market knowledge and knowing that we could structure around this. Another example similar to this that we've run up against is when a property is being sold before it's fully leased, sometimes the lender will ask for a master lease from the borrower. And so then the borrower would guarantee that certain incomes would be earned by the property despite it being mostly vacant.
Got it.
And so this loan we originated for the buyer in May 2021, and we are currently refinancing it right now with Freddie. And so it's another takeout of a bridge loan into an ABC after being fully stabilized.
Yeah. Go ahead.
I'm sorry. Go ahead.
No, I was going to say there's a lot that goes into this, and it sounds like one, you guys know the right people, and then the lenders also, trust you guys as well. So it sounds like you guys are just creating win-win situations for everyone, and definitely having that market knowledge is helpful, I'm sure.
Yeah, when you're like in the top 5 rankings of like the league tables, like we are, between the top 5. Us and our competitors, when it comes down to executing the transaction itself, honestly speaking, there isn't much difference. It really does come down to the institutional knowledge of the mortgage banking platform. What sort of problems or situations have our coworkers run across in all 50 states?
Yeah.
having that knowledge helps us figure out deals before the problem comes up. We're able to identify and say, 4 steps down the line, borrower, you're going to run into a lender who's going to be asking XYZ questions. And in order to mitigate that up front, here's what we need, and here's what we need to better understand. And so I think there's a lot of value in, quote unquote, finding a deal shaman, somebody who knows how to line up where you are now to where you need to be at the place.
Right, absolutely. No, I agree with that. And I'm curious, where does I guess since this is a Real Adam podcast, where does I guess technology come into play, or what is your perspective on it and where it's going in the commercial real estate space? Because a lot of the conversations I have outside of the top 5 commercial real estate firms is about switching over into or adapting using technology. But you'd be surprised, even a lot of or some of the top 5 don't really use it to its full potential. So I'm just curious where you think it's going. For a long time, it has been kind of analog, Gmail, Outlook, spreadsheets, and tracking everything. So even when you're telling me about how do you guys combine, and you guys have the knowledge, but how do you guys communicate on certain deals, manage all that?
Yeah, I think in terms of data in our industry, there are 2 main sectors of data downloads and data analysis. The first is, I think, more pertinent to borrowers, and that's understanding markets and demographics. And so Berkadia, we have the industry-leading technology platform. We not only data scrape from all of the third-party resources that our competitors use, but we also have $350 billion of loans that we actively service. And so we're able to rely on that information to see real time, in specific submarkets, what sort of rental income and what sort of expenses are we seeing. Instead of guessing, we have actual data that we can rely on. Secondly, we have a lot of data analytics. And so instead of just data dumping and saying, oh, XYZ number of people live in these markets and these are the rent levels and here's your expense comps, we can see where have things trended and where have things changed from last year, from 2 years ago, and where do we expect things to be 3 or 4 years down the line. So we're able to identify, for example, tax returns, like what addresses were they filed from in 2020 compared to 2021. So by looking at these filings, you can figure out, 60,000 people moved from LA County over to Plano, right?
Yeah.
And then the second part of data, like you said, is really where Real Adam comes in. It's for the brokers and the mortgage bankers themselves. When you have over 150 debt funds, you have thousands of regional banks that only lend in their specific markets, or you have 30 plus life companies. It's really important to know who the lenders are, which lenders fit this specific deal, which lenders have done similar deals in the area, and how competitive are they now. And so we look at previous transactions that the lenders have done in that market. We can, in terms of Real Adam, we can directly correspond with them through that one, through a singular interface. And so instead of going through multiple emails and finding the right threads, it's very simple and laid out. And I can directly compare the different bids and quotes right next to each other. And that not only saves my time, but helps me be a better advisor to my client.
Absolutely. As was a kind of random question, but what do you, I guess personally, what do you love about commercial real estate? What is it that gets you going about it?
I love that every deal is unique, right? Because real estate is all about location, right? Every deal inherently is unique. You can't have 2 of the same on the same location. I also like the fact that the assets people are investing in are real, they're tangible. I can see it with my own eyes and touch it. I like the fact that commercial real estate has a factor of control. If I bought shares of a REIT or shares of a publicly traded company, it's not like I'm on the board of directors or it can affect any real change. But as a real estate owner, ultimate responsibility falls back down to me. And I like to advise clients who take ownership of that. And there's a lot of pride in owning real estate. And so people who own real estate also want to see the best execution and the best service possible for these investments that they've invested in. I think commercial real estate also has a lot of problem solving. Every deal, there's no such thing as a clean deal. Like something legal is going to come up, some timing issues are going to come up, or there are going to be some transaction pains. And once again, just being that deal shaman and being able to anticipate future,
I love that.
Future problems. Oftentimes, like the problems that we run into real estate, if you just have, you can find smart solutions to them. And I like uncovering these smart, best possible solutions to unique situations.
Right. Do you remember the first deal you closed and how you felt?
Yeah. So the first deal that I closed, let me point out the difference, I guess. So the first deal that I closed as an investment sales broker, my first job out of college, was a small 12-unit property in Van Nuys. And back in 2015, I believe that sold for like 1.2 million.
Okay.
At the close of that deal was more relief than anything else. Knowing that I got my first one on the board, knowing that I can actually produce, knowing that I provide an execution and a sense of satisfaction to the borrower. But it was more relief than anything else. And I would say, juxtaposed to that, my first deal closed at Berkadia has been more pride than relief. Like I had a sense of certainty and execution from start to finish. I knew what the closing table, what the close date was going to look like, what the loan amount will be, and I knew all the steps that were needed to get there. I planned out all the thirds instead of stumbling around. This was well guided. It was a lined up shot instead of just kind of spraying things.
Right. That's awesome. I know we're kind of on that minute mark, but before we go, where can people find you, if they want to reach out to you directly, want to work with you, or whether it may be direct lenders, borrowers, investors, what's the best place to reach you?
You can reach me you can find me at berkadia.com. You can reach me via email at joseph.choi, CHOI, at berkadia.com. My phone number is 415-646-7718. Although I am in the mortgage banking space, we work with all divisions of our company. And so if you have a property that you're thinking about listing or you want to get a valuation on, a sale separate from financing, you can still reach out to me and I'll get you in contact with the right people. Oftentimes we have borrowers or clients who are always trying to figure out, do I sell this now or do I buy out my partners and keep it, or do I just refinance the property and kind of punt this decision down another 10 years or so? That's what we love to do. We love to advise because we know that the transactions will come out from a advising relationship at the end of the day. And so even if it doesn't mean that we're going to get a transaction going in the next 12 months, if it helps you develop a clear picture of what to do with your asset, or you just want a better idea, like what is this worth now? Those are services that we readily provide also.
I like that. I mean, it's pride and value, and the transaction is just a byproduct of you providing, value to the clients, the people. Definitely. I mean, that, ultimately will bring you more business for you and your potential future clients. I love it.
Yeah. And I think, that's why our market share increased during the pandemic and after. Is people when times are tough, people want to work with others who are reliable, and once they figure out people who are reliable, they generally tend to stick with them. I think in the market leading up to the pandemic, investment sales brokers and mortgage bankers were seen more of as a commodity, because when asset values continue to go up and interest rates are at historical lows, like how can you really get into a bad transaction or a difficult transaction? But obviously during COVID, when you have delinquencies, when you have deals under contract that might be falling out, like it's like a system of entropy. You really need somebody to put in that energy to keep the deal going. And once clients see that, we're putting in the work to get this closed and to provide a full service for the entire life of the loan and the entire ownership of the real estate asset, we find clients for life.
Awesome. Yeah, absolutely. Well, look, Joseph, it's great to have you on the Real Item Broker podcast series. It's great to have you as a partner here as well. If anyone that's listening, wants to speak to Joseph, reach out to them directly. The link, the phone number links will also be in the blog post, and if you've listened to it, you can just give them a call directly. If you want to be in between episodes, feel free to send me an email at luis@realatom.com. And yeah, we'll tune in to everyone that's listening, tune into the next episode. And again, Joseph, thank you for your time and telling us your story and about Berkadia.
Thanks for having me on, Luis.
Awesome. Have a good day.